Hello. Welcome back to the show. Hope you're having a wonderful day today. Before we start, I'd like to stress that I am a beginner in trading. I've been trading since February 2020, and I am documenting my journey, wins and losses and all. And this is not financial advice. I am demo trading. So with that said, let's hop right into it. So last week I went over some trades I was in. I was in two trades. First, the Euro Swiss franc, and I believe the Canadian dollar to Japanese yen. I took a loss on the dollar CAD because I forgot where I took a trade. As a matter of fact, allow me to go to my notes. So this is a snapshot of the dollar CAD. When I took a trade in, I put a trade. As you all can see, it had a bottom area support right here. Support broke through. I'm looking at a bearish, I believe, bearish butterfly. This shaded area was the PCZ, the price correction zone, but the price knocked me out. As you all can see, my plan was to scale out, knock me out. So fast forward to here. As you all can see, I marked the support area that became resistance. Price knocked me out, as you all can see right here on the after, and I took a $100 loss. On my demo account with tradingview.com, I have a $10,000 paper trading account, and I risked 1% of the trade. So that I had a 50 pip stop loss. I know that can be wide to some people. I am a swing trader. I mainly look at the 4-hour and the daily. Although I do my multiple time frame analysis, I do trade off the 4-hour and the daily. I like those to sync up, but the price stopped me out. There we go. Stopped me out right here. As you all can see, just a little bit. I went on this trade because it was showing hidden bearish or hidden bullish divergence where we make a low on price, and we had to make another low on price with lower levels of negative momentum. And I think it showed both on the MACD and the stochastic. So I figured that was in my favor. That was my edge on the market, and I put a trade in. But as you all know, you can and will lose money. So I took a 1% loss on my $10,000 account, and it knocked me down to $9,900. I put another trade in. I was on the Euro Swiss franc. This is the 4-hour time frame. If I can zoom out, give you all some more data on why I put this trade in. I saw that the price was declining for a while since about April 2018. Made a bottom right here in this area. Again, we're looking at the daily. It made another higher low, broke the trend line right here while back testing that trend line with a higher low, and that put it in a symmetrical triangle. So I said, hey, this is looking like a nice trade. Common retracement area is 618. Well, from 382 to 618, common retracement area. And so I said, hey, this is looking really nice, especially on a daily on the MACD, and the stochastic we have not hidden, but a classic bullish divergence where you make a low and you make another low, but with higher levels. We make a low but a higher low, but with higher levels of negative momentum on the MACD and the daily. Well, MACD and the stochastic on the daily time frame, which is a much more significant time frame than the 4-hour. So I said, hey, I'll take that trade. And I alluded to it last week where I got a 50 pip stop loss, and I took a trade right here. I was saying that, hey, the price was, as a matter of fact, I have the snapshot. Allow me to find that. Let's see. Where you at? Where you at? Where you at? Okay, let's see if we can. Yeah, I kind of can't see it, but the price was around right here. I know you can't see it, but please bear with me. Had a 50 pip stop loss. I put the trade in when the market was closed. I said, actually, let me just go back. I put the price was around right here in this area. I put the trade in while the market was closed. I said, I know when the market opens, it's probably going to put me into the trade, and I was fine with that. And the price traded negative for at least 2 days out the week last week, 2 to 3 days. I'll say two, and we uh, went up after that. So when I put the trade in, actually, I put the trade in on. What I did, I went to a position size calculator, and my position size was 9,900 because I changed for that $100 loss in the dollar CAD. So I have a 50 pip stop loss. My first scale out for my scale out plan, I have a 101. Well, it depends if I have a 50 pip stop loss. I try to not do more than 50 pips, but my first scale out is 50 pips. My second scale out, it depends. It's going to be either a 3-to-1, or I'll just put the second scale out at a significant either historical support resistance area like we see right here, or a Fibonacci area, which is actually close to the 382 starting of the golden zone of a common retrace area, which would give me a 5.32 risk reward ratio. And the second stop out will, if I can get it, is right before the 50% retrace area, which will give me a, I believe that is, go back to the 4 hour so I can see that clearly, a 8.16 risk reward ratio. So I got the first stop out, there. The reason I'm not moving my stop loss is because I think this is gonna retrace 618%, and that'll actually lead to below my entry area. So I don't want to move my stop loss to my entry area and get stopped out before I reach my other two scale out levels. So that's the Euro Swiss franc. Let's move along. I have I'm in 3 trades total, and I'm looking to get in 2 more trades. I understand you all may say, hey, you're a beginner, that's too much, but I've been, I'm working out, I'm working it out. I may mess up, but it's good for me to see them mess up. All right, so this is the CAD yen, same thing. Let's see here. Yeah, that's not it. CAD yen. All right, so, He had 3 scale out plans. Has actually reached a top where we've been in this. Let me scale out. Need more data. We've been in a descending channel since January 2018, so almost 3 years. And it had you could say almost a double, triple topper here at the top of the channel, where it created a top here in June 2020, a lower top here in August 31st of 2020, and then it retested that top again here in December 10th, 2020. Now on a daily, we had some classic bearish divergence where we made a low on price and a higher on price, but with lower levels of positive momentum, and that was my edge on the market, and I took that trade. Let's go jump back to the 4-hour. Hit the first scale out for 50 pips. This was a 101. I hit a 50 pip stop loss. I hit my first scale out of 50 pips. My second scale out, I got up as a 3%, as a 3-to-1 risk reward ratio, and my third and last stop loss, well, not stop loss, but take profit, is at a 5.57 risk to reward ratio, and I divided the entire lot size by 3. So I hit my first 50 pip take profit both on the Euro Swiss franc and the CAD yen. So I'm looking for the price to, oscillate, go up and down. I did move my stop loss closer to my entry point, but I know I shouldn't do this, but move my stop loss back up depending on, because I think I moved it prematurely back up a little bit, not at the full 50 pips, maybe 30 so pips, to keep some gains, at least 20%, 20 pip gain if the price retests this high. But right now we have strong bearish momentum on the MACD, where the momentum on the MACD has been at a continuous lower levels for some time, with strong bearish divergence on the MACD for some time, for a few months here, and much higher levels. As you can see, the levels of positive momentum on the MACD has been high, lower high, somewhat lower high, and on the negative on the MACD has been building up. So that's the CAD yen. Actually, let's go back to the daily on the CAD yen. So this is my third scale out is right above a historical support resistance. I didn't go straight to the support tool. I didn't move my take profit right at the historical support resistance. I wanted to leave a few chips on the table, just in case the candlestick doesn't hit perfectly on that historical support resistance as it did in the past. It hit perfectly right here. Because I did have an instance. It was kind of weird. I don't know what trading pair I was on, where I think it was the Euro Swiss franc, where the candlestick was right at the not the stop loss, but the take profit of my first 50 pips, but the system didn't trigger it. It was right at it, and with the spread, it was less than 1% of space in between the candlestick top and the take profit trigger area, trigger line. And with the spread is normally like 1 point some odd pips. This thing was less than 0.1 of a pip, and it didn't trigger. So, and plus I learned from other people, just by searching on the YouTube streets, that, hey, leave some money on the table. You never know, because you don't want it perfectly. The candlestick may not hit perfectly. So I left some money on the table. So that is the CAD yen. So as you all know, my rule is, if I hit my first scale out is always going to be 50 pips. I hit that first scale out, then I'm allowed to open up another trade. And once I did, so I hit my I hit my first 50 pip scale out, both on a euro and a Swiss franc and the CAD yen. So I opened up another trade, and this trade was, or is, the dollar yen. On the dollar yen, we have been in actually, let's go to the 3-day. We've been in a descending triangle since, gosh, 2016. I took a few trades here before. One, I took a loss way back before I started my paper trading again, because I want trying to test out this scale out plan, at least with 20 trades. So I see, as you all can see, I see a harmonic, a bullish crab. It meets the requirements, and we have a descending parallel channel. So let's go back down to the 4-hour. Actually, go to the 1-hour. Maybe we can see it clearly. There we go. We can see it a little clearly. So I had a 50 pip stop loss, and I hit my first scale out of 50 pips, and I moved my stop loss. Maybe this about what, 15, 20 pips maybe. I moved, no, it's about 10 pips. Move my stop loss down to 10 pips. The price retrace, I believe, 618, 60%, close to 60% of the, actually more than 60% of the way. Let's do that again. Boom. Yeah, a little more than 60% of the way. Yeah, I think that's good. So I'll be looking for the price to go down. We did have a both. So the price has come from both like a double top and a double bottom. The price off that double top and double bottom pattern retrace some 80, 78%, 88% of the way in an ascending channel, and then it broke down. So that's what I'm trading right now. I didn't get in at the break of the ascending channel, which I wish I had, because I would have been up an awfully lot more. But a measured move of that double bottom would take me to here, but I do have my second scale out at a 4-to-1 RR, and my third scale out at a straight 10 RR. My second scale out is right above, leaving some chips on the table, right above our historical risk reward, and my third scale out, I think, is a runner. My third scale out is a runner, and I'm going straight down. Not exactly to the PCZ, or the price correction zone of this bullish crab, but right just above it, just in case it doesn't work out. It doesn't get to that PCZ area of this potential bullish crab. So that's the dollar yen. Like I said, I did hit my first scale out of 50 pips on it. So that's 150 pips. Let's look at my trading history. So on the CAD yen, I'm up 96.75. Euro Swiss franc, I'm up 40.82. And on the dollar yen, I'm up 45.67. Let's look at the account history. As you all can see, that first stop out of the dollar CAD, I lost $104.18, but I gained $33.07, 33.07, 33.20, and 23.08 on the first 50 pip stop loss, or first 50 pip take profit of the CAD. No, actually the Euro Swiss franc, Euro yen, and the CAD yen. So my account balance is $15 away from breaking even in terms of realized profit or realized account size. My equity is actually $10,168. So I have open profit is 183.24. So technically I'm up, but in terms of realized, I'm down $15 and some change. So the other two trades that I'm looking at, is the euro pound. Let's go over the euro pound. So I see a complex head and shoulders pattern on the 4-hour, and that is also inside a bullish butterfly, which is wow. Now I wanted to take the trade right here when it tested a trend line, and on the daily it came out looking like a shooting star. Didn't get in, it surpassed a 50 pip stop loss I wanted. So I said, you know what, you got it. I'm gonna wait for the retrace, because prices oscillate. I'm gonna wait for the retrace. And that's what I did. I waited for the retrace. I see some waning positive momentum both on the MACD and the stochastic on the 4-hour. On the daily, some waning positive momentum on the MACD. It's about to go over, looks like it's about to go over to the negative territory on the MACD. On stochastic, we are in neutral territory. But like I said, I do see a complex head and shoulders pattern. I have a 30 pip stop loss on this, and obviously that first 50 pips scale out. Yeah, I'm gonna keep that regardless if I have a 30, 20, 10, 15, 50 pip stop loss. My first scale out is always going to be 50 pips. So like I said, I see a complex head and shoulders pattern where we have left shoulder with left shoulder, head, right shoulder, and another potential right shoulder, and a clean, very clean neckline. And to play the head and shoulders pattern properly, I should wait for the break of the neckline in order to get in the trade. But I did a measured move of the head and shoulders pattern from the head to the neckline, the top of the head to the neckline, and that measure move down is where I have my third scale out of the trade, which will put me at a 10.92 RR. My first scale out is obviously 50 pips, would leave me at a 1.67 RR. And my second scale out would I have 150 pips, which would, no, actually 193 pips. I think I have it at yeah, I have it at the neckline. My second, no, not the neckline. I don't know what that is, what I have this at. I think it's at a local, yeah, it's at a local support area that's been established for some time. Yes, yeah, it's at a local support area where resistance became support, as you all see. Far left, resistance broke out and then became support right here, right here, right here, and right here. So looks like a strong support level. So that's my second scale out, which would leave me at 193 pips for a 6.47 RR. And like I said, my third scale out would give me a 10.92 RR. Yeah. And like I said, this thing is looking like what harmonic pattern is this? A bullish butterfly. So I'm going to, if it reaches the potential PCZ of this bullish butterfly, confirming the harmonic pattern, then I'm going to be bullish on this euro pound. So that's the trade I'm going to get in once the market turns back on within a few hours. And the last trade I'm allowing myself to get in is the dollar CAD. Yes, I am messing with it again. I want my money back, but as you can see, the negative momentum has been waning a lot. What's this? Triple MACD or even quadruple MACD hidden bullish divergence, where the MACD has been negative momentum on the MACD has been waning. When I first got in, I had some hidden bullish divergence, but it didn't play out. So my first, as you all know, my first scale out, I got a 50 pip stop loss. My first scale out is at 50 pips, which would give me a 1-to-1 RR. My second one would be a 3.78 RR. I got the scale out just below the 382, and my second scale out plan would be a 4.77 RR, and I have that right below the bottom of the right angled triangle, or what, the descending triangle that's been going on since about June 2020 on the CAD dollar. So I have my third scale out right below the bottom of that chart pattern, leaving a few chips on the table. Not much, but leaving a few chips on the table. So those are the trading plans I have for, this week, or going on this week, and starting this week. I do see something in the pound dollar, but I'm going to leave that one alone. I don't want to be in too many trades at once. So yeah, with that said, as always, if you have any disagreements or want to point something out, leave it in the comments. I'll respond back. I read the comments. But with that said, as always, please don't forget to like, comment, subscribe. And with that said, yeah, I'll catch you guys out on the next one. All right now. Peace.